Welcome back to Rockstock Channel. It is Wednesday, September 25th, and we're recording the latest installment in our Getting to Know You series with Craig Shesky, the CFO of the metals company, who we first interviewed in July. As a reminder, TMC is neither lithium nor traditional hard rock mining, but it is a very big idea that could disrupt how we think about conventional mining for critical minerals to power electric vehicles. Metals company, formerly known as Deep Green Metals, is listed on NASDAQ, ticker symbol TMC, with a market cap of about $380 million, which is less than the $500 million the company has spent since inception 13 years ago in 2011. This week, Craig, is Climate Week in New York in connection with the UN. I've attended a number of events. I think you have a number of events as well. So I'll just say, almost immediately after we recorded the interview, BASF and Eramet pulled out of a nickel project in Indonesia, a $2.6 billion project. And I've just heard, I was at some Brazil events, and there's a lot of reforestation questions. The whole concept of critical minerals and this dirty Indonesian nickel has a fair bit of momentum since we last spoke. So if we could just start with that and Climate Week, and then Rodney can get into a number of other questions since we last spoke.
Yeah, sounds good. It's a pleasure to see you guys again. Thanks for having me back on. Yeah, in terms of what TMC is up to here in New York, where I'm based, but in fact, we have a team of 4 others who have joined to do a lot of side events. And during Climate Week in the UN General Assembly, not only did our sponsoring state of Nauru present last evening, which was a very positive speech noting the benefits of deep sea minerals and why the UN should push the International Seabed Authority to put in place robust regulations to allow this to go forward. But our team's here really to, educate people on some of the impacts of deep sea mining, and to your point, some of the impacts of land-based mining that may be mitigated by this new source of material. In fact, our team, including Dr. Michael Clark, our environmental manager, presented at a side event, which had about 70 attendees, including delegates from around the world, the African bloc of countries led by Ghana, as well as Chinese delegates, even some of the opposition countries who are there to really see the quality of our environmental program, helping to answer some of these questions. Now, to your point on BASF and Eramet and pulling out of Indonesia, I think people are realizing there's not really a free lunch here. And a lot of people associate nickel, which is the largest component of these polymetallic nodules, one of which I hold here. But they have nickel, copper, cobalt, and manganese, all critical minerals on the USGS critical mineral list. For nickel, so much of demand comes from non-electric vehicle sources. In fact, nearly 2/3 of demand is still from stainless. So nickel will continue to be an important part of the clean transition, including the fact that you'll need battery storage systems for solar, for wind, for a lot of renewable elements in the future. And you're going to need nickel and other metals like this for national defense and military applications. So there's no getting around that we need this metal. And to your point, now over half of the supply is coming from the Indonesian rainforest. And, Indonesia wants to be better as well. And we know the Indonesian government well. And, down the road, nodules could be a perfect feedstock for some of the processing facilities there that already exist. But the takeaway is there's a lot of nickel supply that's coming from people's backyards, which has quite a large footprint, CO2 footprint, waste, tailings, and the deforestation issue. So I think when you're looking at Eramet, BASF, and maybe some other automakers like BMW, Volkswagen, even brands like them who have said they don't want to have deep sea minerals as part of their supply chain now, I think they're seeing how dirty the alternative truly can be.
Thanks, Craig. Yeah, that's interesting. It's definitely, I think, going to find its way into the discussion. Just in terms of how well suited your material is and what's happening on the processing side, I saw a recent company announcement about PAMCO producing a calcine from a 2,000-ton sample of the nodules. Can you just elaborate on the success of that process and what further processing trials you've got planned in the future?
Yeah, no, I appreciate the question, Rodney, because for us it was a big milestone. And what often gets lost in the mix here is not only is this a resource that can be easily collected off the seafloor rather than mined. Once it goes to shore, you do not have to build new processing facilities to turn this into usable metal products. In fact, what we showed a couple of weeks ago with Pacific Metals of Japan is the calcine process, and the 2,000 tons of nodules produced 500 tons of this calcine material through their rotary kiln at an existing facility that's been smelting nickel laterite since 1965. And once Indonesia stopped exporting raw nickel to other places like Japan and China, that left a lot of latent capacity that needed feedstock. And TMC can step in with nodules and help keep that RKEF line running. Now, that 500 tons of materials will then go through the electric arc furnace line within Pacific Metals, and that's going to produce a nickel, copper, cobalt alloy, as well as a manganese silicate product. And those are going to be the two initial products that we plan on selling once we're in commercial production. But importantly, that part of the flow sheet has actually already been proven as well. In fact, we used one of Glencore's subsidiaries, XPS. We used their facilities in Sudbury, Ontario in 2021 to do that full flow sheet. So we view this now as very, very low risk from a processing standpoint. And even once that material is processed, we've shown that we can further refine it into nickel sulfate and cobalt sulfate. We've had headlines to that effect earlier this year as well. So the takeaway is getting the nodules off the seafloor, getting them to shore where existing infrastructure already exists, and then seeing it go all the way to the point where it's ready to go into battery precursor materials. We've shown that we can do that full chain, and it'll just be a decision for TMC on how far do we take it. Do we sell an intermediate product? Do we take it all the way to refined material? We now know that we have the technology, the capability, and the partnerships to make that happen in a very capital light way.
And you've got, you signed an MOU with PAMCO. Can you just refresh our memories on what that MOU covers?
The MOU is to do this feasibility work that's occurring now to determine that after this feasibility is complete, that we can enter into a binding agreement to process nodules there from this hidden gem vessel provided to us by our partner Allseas for TMC's exclusive use. So the MOU is covering the work that is ongoing, but we now feel very strongly there are no showstoppers in that work, and we would anticipate being able to reach definitive agreement in the not too distant future.
Okay, excellent. And you've been looking at progressing and moving forward to a PFS for Nori. How's that coming along?
It's coming along very well, and we're looking forward to sharing more when we next report third quarter earnings. But we're very happy with the progress on that front, and I think it'll be important for the market to see not only does this resource for TMC, and just zooming in on our Nori-D area, which is less than a quarter of our total estimated resource. The Nori-D area had about a $7 billion net PV as calculated in early 2021. But that was with a very capital-heavy approach. The assumption was TMC might buy or build new vessels. TMC might build new processing facilities and refineries on land. We're now showing we don't have to do that. We can use existing assets offshore and onshore. So what this PFS is going to show is what the Nori-D project looks like with this new capital-light approach, where perhaps our margins aren't going to be as high as we trade away some of that high margin to our partners who will provide those capital assets to us. But the IRR for our shareholders, we think, is going to be even stronger. So really, I think it's going to be a glimpse into what TMC can look like as this capital-light resource company. And down the road, perhaps as we look to get interests in additional properties in deep sea mining, always keeping a capital-light view is going to be the way that we protect shareholders from cost overruns, capex overruns. And really, we've seen a lot of volatility for the metal prices in the basket that comes from these polymetallic nodules. It's nice to have that margin of safety where we know that because we have such a high margin to begin with and such a high grade of these materials, we have the flexibility to trade away some of that margin to our partners to reduce our capex burden and ensure that we can be profitable across any cycle.
Excellent. And the topic is always, the environmental impact and lots of people with eyes on that. But in the mix, there seem to be some concerns raised about the validity of the dark oxygen paper that was published by Sweetman et al. What are those? Can you just pinpoint those concerns?
Yeah, there was a paper that got quite a bit of media attention this past summer, and it coincided with the decline in our share price. This very loud, salacious claim that these nodules might be producing oxygen. So, if that were true, and that oxygen being produced not through photosynthesis, but through some other mechanism produced by these rocks on the seafloor, well, my goodness, that would be a very groundbreaking claim. The issue is that is completely at odds with other peer-reviewed, observed data papers within the abyssal zone of the Pacific Ocean, showing that nodules actually consume oxygen. So there are four papers, three of which were published with peer review in the few years prior to that Sweetman paper, showing the exact opposite of his conclusions. Further, despite the fact that the media jumped on this dark oxygen claim, because look, it sounds interesting, right? Dark oxygen, dark matter, it sounds very spooky. The reality is we believe the paper is simply wrong. And in fact, Science Magazine on September 18th published an article quoting many different scientists from Europe, from Tokyo. In fact, there was a geochemist from the University of Tokyo who noted there is a high possibility that that dark oxygen paper is incorrect. So we have published our own rebuttal. Stay tuned for that. And in fact, we hope that that rebuttal gets published in Nature Geosciences, which published the original paper. But the takeaway is we think the dark oxygen claims are simply incorrect. And there is a lot of shoddy science that went into it. That said, this is a good example of, this is data that was gathered for this Sweetman dark oxygen paper on one of our campaigns. And even though we completely disagree with his methodologies and conclusions, it shows that anybody who is on a TMC research campaign is free to publish what they want to publish. And if they can get a journal to, put it out there, then it's up to the scientists to actually defend their claims. And frankly, we think the better science is on our side on this one. But it just shows there is a lot of credibility to our process, and that any of the scientists who are on our research vessels are free to publish any conclusions that they do find.
And then, of course, the ISA regulates the seabed minerals beyond national jurisdictions. Are they still on track for the adoption of a mining code in 2025?
We believe they are. In fact, the Secretary General of the ISA, Leticia Carvalho, who was newly elected, she recently had an interview, I believe, with CNBC, noting that they are targeting the adoption for the mining code by the end of 2025. For the last four meetings of the International Seabed Authority, they have reiterated that they have a view to adoption of the mining code at some point during their 30th session, which is the year 2025. Importantly for TMC, we do not have to wait for that mining code to be in place to launch our application. And investors should think of it as really a parallel path. We have the ability to put forth this application on which we've spent really an aggregate over the last decade plus $500 million, $200 million of which was spent purely on environmental science. We are now getting all of that data together and putting together that environmental impact statement, our pre-feasibility study, our mine planning, the various other elements of that application, all going together to be launched next year with the ISA. So they will, you can assume, be reviewing that application while they are still finishing that mining code, putting the finishing touches on it. It is very likely, however, that the code would be in place prior to us beginning commercial production. So you can think of it as a parallel path, the review of our application alongside the finishing touches on that mining code. And keep in mind, the first version of that mining code came out in 2015. There's now one consolidated text. And the ISA Council, whose president is Norway, has been working diligently post this last July meeting of the ISA, intersessionally, working on various elements of that code. And you can expect another draft version of that mining code to be put out before the end of this year.
Okay, that's interesting. And just broadly, Craig, with geopolitical tensions between the US and China and Russia rising, I wonder where the Department of Defense is in this in the US. Where do they stand given the size of your resource and the scale, and how much of a critical minerals supply problem you could fix?
That's a great point. I think the Department of Defense is going to be on the right side of this. That's my anticipation. We think, any week now, one might see a report come out from the Pentagon after doing a very deep study on the potential for polymetallic nodules to effectively take the U.S. from de minimis primary production of nickel, manganese, and cobalt to self-sufficiency in all three of those. In fact, TMC believes our contract areas alone have sufficient amount of those metals to bring the U.S. self-sufficiency in all three. So I think it's too big of a solution to ignore, and I don't believe the U.S. government will ignore it. In fact, the National Defense Authorization Act, the House version of it, already allocates $2 million to have the U.S. do feasibility work on eventually bringing a refinery stateside to process nodule-derived feedstocks. $2 million, of course, is a drop in the bucket compared to what China is spending on this. In fact, China, we estimate, has spent over $1 billion already on their deep sea mining technology and resource exploration. So we see a lot of headlines coming out of China. Russia, as you point out, is already a major nickel producer. And there is a possibility, the way things are going, that nearly 3/4 of the nickel market may be sourced from countries that have major investment from China or from Russia. So therefore, there's not going to be a lot available, especially given how important nickel is for aerospace and defense. There needs to be another robust, secure source, and we believe nodules are it. And we think the U.S. government believes that as well. And hopefully we see more headlines to that effect in the coming months.
And then lastly from me, we haven't caught up in a while. How does the company's funding position look at the moment?
We feel very good about our liquidity position, nearly 50 million of liquidity, including about 47.5 million of unsecured credit facilities provided from our three largest shareholders. So yes, we run with a really lean cash balance because we use those facilities as and when needed. In fact, you may have seen a headline from just a couple of weeks ago that our partner Allseas provided an additional $5 million loan to, at basically the same terms, unsecured SOFR plus 4%, to keep our project on track. So we are doing everything we can to, not bite off more than we can chew and to avoid as much dilution as possible for our shareholders, especially when the share price is lower than it should be. And we are trading right now at about 4% of the underlying net present value of just the Nori-D area, so less than a quarter of our resource. I would be used to seeing metals and mining companies like this, nickel and copper developers on land, perhaps trading at 40% of net present value when you're just a couple of years away from production. So there's a major disconnect, and that creates an opportunity for those who want to invest in TMC stock. But suffice it to say, we feel good about our liquidity position. We also feel good about some of the strategic conversations that have been ongoing, and frankly, they take longer than one would like. But we are sitting really at the precipice of this new industry starting, where TMC is generally understood to have some of the best contract areas that have the most work done on them, the most money spent on them. And as more and more people in more and more countries, such as Norway, Japan, India, China, and yes, the United States, look to seafloor resources, TMC is going to be the natural first place to look for partnerships and other opportunities as people try to catch up to what we've already done.
For our viewers, just a reminder, we are not strategic advisors to, nor invested in the TMC at the moment, and nothing you're hearing here is financial advice, but we are very substantially intrigued, by the company, which is not a story, so much one of a challenging new technology, but more so one of permitting. And there's been a lot of momentum, on that front, which hopefully will transpire in the next 12 months or so. And we're looking forward to seeing, that PFS. But to your point, lots of companies have lots of risk that are trading at meaningfully higher than 4% of, their NPV. We do have, so we've seen the research that you have from Cantor Fitzgerald, Matt O'Keefe. We suggested in our last video, and again, we'll suggest now, if any of our viewers would like to see that or any other research from the metals company, please email us at rockstockchannel@rkequity.com. And if you like this video, please like, subscribe, comment. What do you think of the metals company? Are there any other companies like this or that you're invested in that you'd like to see covered on Rockstock Channel? And with that, Craig, thank you for making the time for this second video. And hopefully, maybe we'll catch up. I'm in New York, at some of these UN events this week, but if not, soon thereafter. Thanks again.
Thank you, Howard. Thank you, Rodney. It's a pleasure.